Hello everyone, welcome to today's video. I'm going to go through currencies and then through stocks, Bitcoin, gold, and some of the energies and so on, and the 10-year yield. So let's have a look at this quickly. Currency is frustrating. As you know, the dollar index has been rallying on and on and on, creating havoc in other fiat currencies and markets around the world, including and related to the bond market and commodity markets and metals and energies, all sorts of things. This is the dollar index day chart, a steady march up. A little bit of sign of topping here, but what we've done is we've broken up above this Fibonacci level. Let me zoom out. So this is the 618, the golden pocket Fibonacci. There's the 786, the top of this yellow zone. And that could take us all the way up to 111 or 112. We're currently at 109, so 300 pips above us still potentially, based on Fibonacci analysis. However, we are into this market structure break zone, and there is some resistance around here, as you can see, with this thrashing around, lots of buying and selling action taking place. Once we reach that very, very high level, we're at the bottom of that range now, where we sort of went slightly parabolic and then fell back down quite sharply. So we got back down to 100, and as the dollar index often does, from 100 bounces back up again, but we didn't expect to go quite as far. Look at these candles on the daily chart, maybe a reversal candle, maybe something similar to a dark cloud cover, although the candle body is not big enough. That leaves us with our trades on the euro, the pound, and the dollar yen, all still long and sort of flailing around here at these low levels. We do see reversal candles on the euro and the pound, and the dollar yen, well, not really on the 4-hour chart, but if you look on the day chart, perhaps some signs of topping. Now, I do believe that the US government and the powers that be, the fiscal authorities and those around the world, may be talking about the dollar and the bond, the long end of the bond market curve at least, and that there may be some intervention. Sometimes there is, to keep the dollar down a bit, give the other countries a bit of a breather. A lot depends on interest rates and where the US is going with that strong jobs report. It looks like it's going to be higher for longer again. Incredibly strong jobs report. Whether we can trust those numbers or not, I don't know. But this is the dollar yen trying to top here. I've got this other fractal drawn in here, this red block or red fractal drawn in from this previous rally when we got up to 162. If we follow this path, we will actually mimic what happened previously identically and potentially get a double top there. Let's see how we go. For now, we've got a rising channel, which is actually not a bullish channel. Rising channels are normally more bearish than bullish. That's what we've got within these red lines here, and testing that 20-day moving average here on the dollar yen. I don't know how these will go. If they carry on moving dramatically further down, currencies against the dollar, I'll be forced to hedge these trades. I don't think that's the most likely case, as I've often said. Now let's go across the stocks. We exited our shorts on NASDAQ and German 30 yesterday, right at the bottom, and we're now sort of 5 for 5 on this zigzag movement. We got the top, we got the bottom, we got the top, we got the bottom, we got the top, and we got out at the bottom. So that was 5 trades in a row. We haven't taken a 6th yet. I don't know how this is going to go. It's more and more looking like a bull flag. We've got the bull flag drawn in here already. That's this triangle moving downwards. No, not triangle, channel. And we haven't quite tested the bottom. We may need to retest the bottom. That could take us down to 20.2, but we're currently at 20.9. And that spike low yesterday, just below there, sweeping those support levels, may have just performed a reversal. We're flat on all stocks except for we're long on Coinbase and we're long on Tesla. Those are the only 2 stock trades we got out of the German 30, by the way. I'll be looking to resell all of these stock indices at some point in the future, whether we break up and make a new high or see some reversals in between, or potentially if we drop down, bounce through those support levels and a breakout pullback, I'll try and sell the pullback. But generally looking to go short on stocks, not long. Not because I think these markets are going to carry on moving down, but because I just don't want to be buying at these very, very high levels. And I think the better opportunities might be with the shorts. Hence, we exited the German 30 and the NASDAQ. So we're actually now net long on the stock market. Even though we're not in the indices, we're long on Coinbase, reaching down into that support level. Not quite getting there, but pretty close. There's the 200 and the 100-day moving averages. There's the breakout channel line going back some distance in time. And we've returned to the top of that channel. It was also support there previously, going back into May 24. So we've returned to the channel where we broke out, and a little bit of a bounce yesterday. So we're in profit on this trade. I'm allowing for dips down to here, and I'll DCA those ones in there if we get a chance. Someone reminded me in my private group that the people that made the most money during the gold rush in various countries in the world, let's go with California or Johannesburg or South America, wherever it might be, Russia, the gold rush money, the funds that are made, the profits that are made normally by those who supply auxiliary things like wheelbarrows and shovels and services and prostitution, dare I say. So it's normally the services that actually do the best. So that reminded me I need to get into my coin trade long again. We were long previously, we got out near the top, we're long again. Coin is a service to the potential new gold rush in Bitcoin. We're also long on Tesla. I just think Tesla's generally a good bet, and well, we reached support. We actually didn't, we got in maybe a little prematurely here. I was looking for a move down to the moving average here, but anyway, we got in slightly early. We're long on that and just about at break even at the moment. And that's it on stocks. Now to Bitcoin and gold and platinum and palladium and so on. We're long on Bitcoin. Now this move, let's just start with Bitcoin. I'm not going to go into too much detail on Bitcoin. There are plenty of websites that are Bitcoin specialists, Bitcoin kings, Bitcoin gurus and wizards and magic makers who all know exactly what's going on with the Bitcoin cycles, the halving, what's going on in the background, who's doing what the hodlers, the diamond hands, the paper hands are all doing, and they're just on it, man, like you can't believe. I don't claim to have that insight into Bitcoin. I traded like any other instrument. We had a clean out below support, quite a dramatic one down to the moving average. The 100-day moving average is slightly below there, and a pretty good pullback, a nice clear out of that support level and bouncing up quite nicely. This happens every single time with Bitcoin. We get a clear out after consolidation. We saw it there. I'm not going to go back and show you the examples. Many people are delighting in showing you these clear outs which occur. Let me just show you from my perspective. There's one right there, clear out beneath the lows, and off we get. There's another one here, clear out beneath the lows, and off we go. Here's another one here, clear out beneath the lows, and off we go. And now, well, there's another one over here as well, clear out below the lows, and off we go, and so on and so on. That's what Bitcoin does. Obviously, there's a whole dynamic going on here with hodlers versus diamond hands and paper hands, long-term funds, adoption, growth, day trading. There's all the, the meme hype and the gamification of the whole thing. It's a very different market, but what it does often do, and very consistently, is clean out all the weaker paper, not hodling hands. And we've done it again, and that gives me good reason to think that we may now have cleaned out what we need to. I'm not too sure about that. I'm allowing for a move down to 80, 85, even 75 if we have to do that. There are various other support levels down there and reasons why that could happen. We're also long on gold. Gold is just sort of faffing around here at the moment, but although everyone seems to be bullish gold, I'm not totally convinced. And in fact, yesterday we performed a reversal bearish engulfing candle, and it doesn't look so good, but we are long. If anything, this is a consolidation triangle. I can draw another line at the bottom of this one over here. It's performed already by the moving average, but let's just do it like that. Let's make that one black too. And you can see what we've got here is these two triangle lines that, well, let's make them purple because they're actually now indistinguishable from the other lines, and probably purple isn't going to really help either, but let's just make these purple. So these purple lines are forming the triangle, consolidation triangle, pennant, flag, whatever you want to call it. Maybe it's a bullish pause on gold. I'm not too sure. We did try and break up through there the day before yesterday, try to poke up through there, not quite doing it, fading back down again. We've got some support beneath us. I think as long as we're above this long-term trend line and the 200-day moving average, that's this purple one, I'll continue to remain bullish. I think that's a very simple scenario to compute. If in doubt, look at the 200. Are we above it? We're bullish. Below it, we're bearish. Very, very simple idea. But if you're in doubt and you don't really know, that's the best way to approach any market, I think. Now, we're also long on palladium and platinum. I really don't have time to go into all of these right now, but looking like we're trying to form a bottom. I've talked about the smiley face on both of these instruments, platinum and palladium. This is palladium, trying to form bottom here. Whether we'll get enough impetus on this, we got a big sell-off in palladium generally because of the encroachment of electric vehicles and the discontinuation of the need, as much need for catalytic converters for ICE, internal combustion engines, and electric engines put paid to some of the palladium usage. But let's see if we can make a little bit of a resurgence, and maybe petrol engines are making a bit of a comeback. Same with platinum, but for different reasons, also forming this sort of rounded bottom, was trying to, and then collapse back down. Maybe we've got a cup and handle forming here. Let me just sort of try and draw that in like that. And my finger's running off the edge of the mouse pad, forgive me. Something like that, a cup and handle on platinum and palladium too. Very similar sort of looking charts. So maybe that's what we've got going on. We're long on both of these, platinum and palladium, and hoping for a stronger continuation of the move up. We're also long on XRP, very similar to Bitcoin actually, just a nice clean out below there, although we didn't get below the lows, of course. XRP showing some strength and resilience at the 20 and the 50-day moving average right there. Those are the daily 20 and 50 moving averages, bouncing perfectly off there with XRP. So we have a nice long position on there, and Ethereum doing the same thing. Ethereum looking even nicer though, because we did clean out the lows, but we also bounced off the 200-day moving average on Ethereum after clearing out those lows down there, bouncing off nicely and doing very similar to Bitcoin, performing a reversal candle there. Let's go across to energies. Now we've got uranium. We're still long on uranium. Incredibly tedious. I was thinking about uranium, micro nuclear reactors and nuclear reactor plants to provide electricity. The point is the world needs a lot more electricity, and that demand's not going to stop growing. Whether that's going to come from coal in China, who are supplying solar panels to the US and Europe at high cost, and making it very difficult to buy energy in those countries because of the price of all of these things, but it still gets manufactured in China using coal-fired plants. What's the West going to do for its electricity demand? The UK had to import 14%, I believe, and correct me if I'm wrong, of its electricity from France just the other day. And so which way are we going to go? I do think that nuclear is most likely. I think coal, gas, oil, there's probably a space for those still for some time to come, but I think we're going to go nuclear. It's going to take a long time for these uranium instruments to gather strength. But overall, I think we'll see a slow, staggered uptrend, and I'll continue to buy dips on those. Now, natural gas, what a mess. Let's just have a look at the day chart here on the Henry Hub at Black Bull. This is a 4-hour chart. I want to go to the day chart and just show you what happened. So if you have been following me, you'll know that I got hedged on this move down, testing those support levels. And although we were long, I had to take a hedge position because we started to break down through these supports. And then a couple of days later, we moved up. In fact, on the weekend, I think it was on Sunday night, or maybe it was yesterday. What are we today? Tuesday. So Monday. Yeah, so it was very, very early on Monday morning, actually in the middle of the night my time, and I didn't manage to get the top. By the time I got to my charts, we were halfway back down again, and we remain hedged. So, but I think quite luckily, really, look at this very messy chart pattern over the last period, over this contract. This is the contract rollover around about here somewhere, I think, and just a huge, messy chop type of event. Let's have a look at it on the Henry Hub so that we can see the rollover. So here we have it on the NYMEX. There was the rollover. As you can see, we gapped down, or rolled down rather into the new contract. And this is the new contract. Since then, right down there, moving up, zigzagging, big days down, big days up, up, down, all over the show, and just a real mess. This contract I'm talking about in general, it's been quite a nice run up, but it's got suddenly very messy, which might indicate that we're near a top again and that this market wants to pull back. So looking at this on the 4-hour charts, basically, we had that gap up on the weekend, didn't manage to get out of that trade at the top, as I said. By the time we came back in, we were halfway down, and then I was waiting for it to either move up or back down again. As it happens, it's moved down. Luckily, I didn't get long again on the pullback. So there we are, looking pretty weak, really, breaking down through the 20 period moving average on the 4-hour chart, held up above the 50 and the 20, the 50 and the 100 so far, and there's the long-term trend line. So let's see how we go on this. I have no positions. I'm flat on natural gas, first time in a long time. But what we do have on is WTI, and I'm short on WTI. And you can see my two positions, my current positions. We can get rid of this line now, which no longer is going to happen as I thought it might. But there's our two positions, short there and short there. There's the 200 period moving average. We've broken above it. We've got a long-term downtrend, channel top above us. We still have not visited the channel bottom yet, and I think that's the next move. Let's test this channel top, reverse, move back down, and then eventually get down to the channel bottom. If that happens in the next month or two, we should get down into the mid 50s on natural gas, on WTI. An interesting perspective on this is looking at Brent crude. While we're at it, we have actually reached that trend line at the top, and Brent crude is now trying, this is a very long-term trend line, Brent crude trying to reverse here. We're at the top of the order block, well, halfway into this red order block. We are above the 200-day moving average, which we don't really like, but notice that on both WTI and Brent crude, we do often get these poke-ups through the 200-day moving average, like we had there and over there, and it's not always that neat and clean around the 200. Nevertheless, we would like to see it below there because that indicates a general overall bearish trend. We did see this gap up on Brent crude, touching that trend line, forming a negative candle. I wouldn't say bearish, but it wasn't a bullish candle. It moved down. We ended up with a lower close than where we opened up that candle, and today just moving down a little bit. So I think we're looking okay. My target eventually for WTI is into the mid 50s, as I said, and then eventually into the 40s and even the 30s. So that's oil for you. Let's go across to look at these. A couple of interesting charts. I'm not going to really look at the VIX because I think the VIX is going to turn around now. I've got no interest in the VIX right now. I am interested in TLT. We're long on TLT, as you can see. I'm going to briefly look at this chart and then go to the 10-year yield. There are long positions on TLT, so well out of the money on this one. We don't have a huge, massive trade on. I've got a full position on this, but it's not a big portion of my overall order book or my allocation. So I'm not too concerned about it really moving around and lower. But what I do find interesting is the 10-year yield, and this will direct the movement of TLT. Look what happened. We broke above the 78.6. This is just this week. We broke above the 78.6% Fibonacci and that previous swing high, which I said in my last video was a potential turning point. Well, it didn't turn, but we went through, closing on Friday above there. And then on Monday, yesterday, we've performed what is now potentially an abandoned baby candle. You might consider this to be an evening star perhaps, but an evening star doesn't require gaps. We've got a bullish candle, a gap up, a doji candle, a gap down, and now this candle seems to be wanting to reverse or resume the downward trend. And that would then form, if this confirms and breaks the trend and moves down, we need to put a trend line in there just to indicate where that trend might break. But if we break this trend, it's quite a neat trend line actually, break this trend, move down, confirm that abandoned baby candle pattern. If you don't know what an abandoned baby is, go and check it out on Investopedia. They have all sorts of training material on candlesticks. It's a really, really useful resource. Go and look up abandoned baby. They've got a nice picture of it there. Looks exactly like this. And if we do perform the abandoned baby, it's a strong, rare, and powerful reversal pattern, which could see us moving sharply lower on the US 10-year, which will bring the dollar down and will bring TLT up. And then also, of course, that gives room for all sorts of things to rally, like oil, like natural gas, like gold, like Bitcoin, like stocks, the euro and the pound, and so on against the dollar. So are we going to see a bit of a pullback in the dollar? We'll have to wait and see. But I think that might be on the cards this week. If it does, it'll make everyone pretty happy. Now, going across to softs and grains, I'm not going to talk about this except for two things. We got out of our corn trade. We took profit on this at 4.55, I think it was, or 65 rather, 4.65. We're now at 4. We're still trading at that level. There's my arrow. We got in at 4 or just around about 4. We got out at 4.6. So about a 12% gain on that. And we're also watching very closely soybean, and this has now moved up. There are entry points, 1, 2, 3 tranches on this, moving up towards first resistance at 107.4 or 107.34. If we get there, we'll consider perhaps taking some profit off or hedging or something like that, depending on the angle of attack and the approach and the way we approach that line, whether it acts as a price magnet with a sharp spike or whether we just blast through it or trickle up towards it very feebly. We'll have to wait and see. So far it's looking strong. We might just blast through there and carry on moving up. Target eventually for soybean is probably around about 1178, 12, and maybe at a stretch we could get a lot more than that, perhaps up into the key and major support level is at 1287. That's this double swing low, triple swing low, quadruple swing low even, maybe even 5 in a row, but it's also the 50% retracement level, which is a very, solid and key retracement level in any trend. Folks, if you enjoyed this video, I'd love your thumbs up and your subscription to this channel, and I'll see you in the next video. Please put any comments up if there's something that you'd like me to analyze that I haven't done, and I'll try and include that in the next video. Take care, have a great trading week, and I'll see you in the next video.
That'll be the dice, man. CME florist, watch precise, fam. Market play, got the nat gas surge. Fingers on the trigger, yo, time to splurge. Downtown hustle, suit game clean. Vibes electric, screen buzz mean. Neon lights reflect my winning streak. Move so sharp, stand tall, don't blink. Hit the bid, don't miss the rate jump. Nat gas flow, make